Welcome to my YouTube channel Stock Explorer. My name is Arup, and together we embark on a journey to uncover hidden gem stock with exceptional growth potential. I am thrilled to introduce you to lesser known companies that possess the capacity to shine brightly in the future. This company may possess innovative business model, revolutionary technology, or access to untapped market, enable them to seize opportunity and experience rapid growth. Join me as we venture into realm of exploration and discovery, where we shed light on remarkable companies poised for success. Through in-depth analysis and insightful discussion, we'll unveil these hidden gems, bringing their potential to the forefront. Today's featured pick is Jyoti Resin and Adhesive Limited. Let's examine how this company aligned with my six criteria. It boasts a strong ROE of 55.1% and ROCE of 72.9%. Although its price is on the expensive side, current price is 1489 I think, with a PB ratio of 15.8. So I made it red. The the company is debt free. It is a zero debt since 2018 I think, and has no pledge share. Public holding is it at minimum, it is 43.58 or 48.8, probably there is some increase there. With the individual investor holding over 20%. I mean, this 48.8% holding, out of these 20% is individual investor. So you can understand that. Additionally, both sales and profit have shown significant year-on-year growth at 43.58% and 152.67% respectively. The business also exhibit low risk due to limited competition, though the industry itself is dominated by giant. There is one single giant. When I explain it in the later slide, you will understand. We'll delve further into the aspect. Here, this bottom portion I cut and paste here. Here you can understand how they are utilizing their investor money. So, in fact, they have a good ROCE and ROE. So you can see their investor money had increased 70% year on year in financial year 23. Second largest brand in India. Okay, the first largest brand is all well-known brand. I'll discuss it later. Their profit and both operating profit and net profit are increasing in a multiplication 1.5 times to 1.35 times in financial year 23. I told earlier also it is debt free, and revenue touch 262 crores in financial year 23. Current production capacity stand at 2000 TPM, that is ton per month. Dividend, it gives almost handsome dividend of 60% per share. Okay, you will get to know about these also in the later slides. I picked up this in spite of the price is quite in a higher side, because of my other than these, everything is promising. Let's let me tell you one thing. By the I previously held this stock at around 50 rupees in the beginning of 2020, but sold it at a modest premium, mainly because of my limited knowledge in assessing a company's fundamental that time. This is one of the reasons why I decided to revisit and pick up this stock. At present, the market is at all-time high, but it is crucial for individual to exercise caution and invest wisely in stocks that have the potential to outperform. I mean, we should pick up. We are almost in a consecutive session. We are maintaining the Indian market is at peak. So you should be careful choosing the stock, okay, which got a latent potential. Only those stock you should invest right at this point. This is my view. Before that, I would like to uh, run through the result which was declared by various companies. This is one slide. I will not stop here for long. I'll give, however, 5 to 10 seconds for each 3 slides. This is one first slide of quarter 1 financial year 24 result, which are posted by the company yesterday. One is Tanla platform, South Indian Bank, Nelco, Coforge, Infosys, CSB Bank. You all know how market reacted on Infosys result. Okay, so in fact, this has caused a lot of nosedive for today's Nifty. Okay, so now out of these, South Indian Bank also done a good result, but however it was not rewarded by the market. Okay, let's go to next slide. These are other stock which I picked up, only selected stock. I request you to get into this yourself. I mean, you should study all of this. Persistent also not market didn't reacted good way. Hindustan Unilever also all know. India Mart, Intermesh, United Spirit, okay, but you know how to see this, correct? One first column is year on year growth. I mean June 22 over June 23, and I have given March figure also, so that you can understand it. The best way of understand the stocks performance, you can see the EPS. Okay, if you see EPS 3.9, March it was 1.8, then 4.86. So that is how I picked up the stock where there is a growth. So you must have noticed that. Okay, so this is the, now go to the last slide. This is Havells. Havells also is so. The market didn't reacted on this performance. Genser Tech also. Genser also posted a good. I didn't watch Genser. However, this is all. Okay, there are almost I think 15 odd stock I have posted here. However, I encourage you to conduct your own study analysis. You can pause the video to note the summary of this result. Okay. This is a disclaimer. I would like to note this. A word of caution. I'll not repeat in every slide. Investing in this stock requires thorough analysis and research. I conduct in-depth investigation to uncover their hidden potential, analyzing their financials, growth prospect, competitive advantage, and market dynamics. Our goal is to identify companies that have the potential to outperform their peers and generate substantial return for investors. However, before we proceed further, I want to present this disclaimer. I am not a SEBI registered and authorized stock analyst. I gather stock performance data and trend from recent companies' report and collect business figures from various sources before presenting them to you. Please note, this is solely my personal study and I do not recommend you to invest based on it. I strongly advise you to consult with your financial advisor before making any investment decision. Now, next slide. This is Jyoti Resin and Adhesive Limited. It is manufacturer of synthetic resin adhesive. Now probably you could recollect which company is the competitor of this. Probably you could understand it. Brand name is Euro 7000, launched in 2006. Second largest selling wood adhesive brand in India. This company has steadily increased its plant capacity at Satej, Ahmedabad to 1000 ton per month. And further expanded it to 2000 TPM per month. That is 24,000 TPA. Ton per annum. In August 22, they have expanded their plant. Euro 7000 has experienced exponential growth and it is now the second largest selling wood adhesive white glue brand in India's retail segment. So its competitor is Fevicol, the Pidilite. Currently, the company serves 12 states in India, that is 50% of its market. So you can understand how it got 50% untouched market. 28 branches and 50 distributors. Okay. They are okay. So currently the 50 distributor. They basically caters to almost 10,000 active retailer. Okay, that is the additional information which I was just trying to find it out. And 3 lakhs carpenter across the country. Is a 300 strong sales force plays a key role in their process. 300 marketing professionals are working day and night to enhance their business. Company maintain a low debt to equity ratio at 0 because they have removed their debt in the year of 2018. Post that they are maintaining their 0 debt. It has shown healthy long-term growth with net sales growing at an annual rate of 35.32%, operating profit at 105.11%. The company declared very positive result in March 23 with a net profit growing by 35.06%. It has declared positive result for the last 11 consecutive years. That is, post-pandemic, there is no look back. Net sale half yearly stand 131.69 crores, growing at 23.86%. The company ROCE half yearly is the highest at 57.96%, and PBDIT quarter is the highest at rupees 20.05 crores. However, it is important to note that with a ROE of 43.8, the company has a very expensive valuation with a price to book value of 15.8. The stock is trading at a premium compared to its average historical valuation. Over the past year, while the stock has generated return of 77.77%, its profit have risen by 134.9%. PEG ratio of the company is 0.36. Despite the size, domestic mutual fund holding 0%, probably they are not uh, interested about this company. Please remember to conduct this kind of research and analysis and bringing it to you require a lot of hard work. So I'll request you to subscribe, like, and share to your close community. This is my table which I made it. If you can see that March 19 to 20, the growth was not that, but post March 20, you can see the growth. Okay, the growth year on year sale growth is huge. Operating profit also huge. In fact, you can see the EPS. How I told you now, how EPS is one of the thing where we can find it out whether a company is making profit or shareholder is getting benefited. So this is what, and they are and this profit basically allows enable company to pay dividend. So you can see that dividend also company started paying with a good amount of dividend. This is their cash flow statement. I didn't put the entire cash flow statement over here. You can check it out their investor presentation, but I just cut paste about the cash flow statement, where you can say that they are cash rich company. They have, and moreover they have grown from negative cash margin to cash flow to positive cash flow, and that to minus 23.7 to 377.2 crores. Okay, this is good one. Now this is one thing basically for which it it basically one of the criteria. I look at the way forward plan of the company, which was very promising. So that is one of the reason I picked up this stock for you. If you segregate this, it basically covers in four areas. One is the production, enhanced production capacity. If that is the subject, then the company has already increased the production capacity to 2000 TPM due to high demand and market growth. They plan to set up warehouse for better storage of raw material and finished goods. Then about the distribution network, the company aims to expand its presence in existing states by increasing branches and distributors. They also plan to enter one or two new states to improve market share and operational efficiency. Growth target, if you see that targeting 25% CAGR in revenue over the next 3 years, aiming to maintain 30% ROE and 40% ROCE. I mean over on top of it. Financial goal is maintain a debt-free status, generate positive operating and free cash flow, reducing liability for expenses for redemption points to below current 31% of revenue. In summary, the company plans to enhance production capacity, expand its distribution network, and achieve significant growth over next 3 to 5 years while maintaining a strong financial position. This is, I am not telling it, this is the cut paste from their investor presentation. You can go and check it also. Now let's now take a look at the price movement chart for the past year, and later I will show you the 3-year chart also. An interesting observation is that the price has consistently respecting their 200 DMA, that is 200-day moving average, never falling below it. If you just see the black line where it's passing, it never fallen below. I'll show you that same chart of one of the top Nifty 50 stocks. Then you can see the difference. Okay. Uh, in this, whenever I show the chart now, basically I probably thought I am tempting you, but I must emphasize that I am not recommending buying at this stage. It is essential for you to conduct your own research and seek advice from your financial advisor before making any financial decision. Please be responsible for both risk and reward involved. It is worth noting that Jyoti, resin and adhesive may be considered risky due to its high P and PB ratio, as well as the low or negligible presence of institutional investors, suggesting lack of interest in the company's business or the price where it is presently trading. Let's wait for the Q1 result before considering any further action. Now moving to next slide. This is 3-year chart. Okay, 3-year chart also you will find it always respected 200-day moving average. This black line is 200-day moving average. Okay, and yellow line is the 50-day moving average. Okay, so just remember this chart, make a print in your brain so that you can compare the next slide, where I put the one of the tallest company's chart. I'll not tell the name of the company, just have a comparison apple to apple. Yeah, this is that company. Okay, so don't get into much, you can find it out yourself. I'll not tell the name of the company, but see the price movement. Okay, it crosses the 200-day moving average. It is one of the 10 Nifty stock top. Their market capital is highest in the market. Okay, so I am comparing with that. It fallen, crossed in the I think it is in the May June it crossed 200 DMA, then again crossed tried to cross 200-day DMA upward, again came down, and the fluctuation you can just see yourself. And this is the peers. Okay, now if you see that price, all the products company which got a industry PE of 26.19, I always put this to give a perspective with along the peers company. If you see, Pidilite is the top one company. Okay, and a product wise only it matches with the Pidilite because they have the adhesive adhesive which Pidilite also Fevicol, they have Euro 7000. Okay, now if you see the market cap, okay, if you multiply its market cap with 81, you can find Pidilite. So Pidilite is 81 times bigger than Jyoti resin. Okay, so I, as usual, whoever follow my channel, they knows I column wise pick the best figure and mark it green. So in this figure, in this table, I marked wherever it is green is the best one for this particular column. So if you see the P column, it is 11.17. Okay, that is Tata Chemical. In the ROC column, Jyoti resin is the best, 72.9. It is the highest. Current market price by BV, I mean book value. Okay, that is basically PB. PB ratio is 1.29. Tata Chemical is always best. Debt is 0. EPS is 120.97, that is a 12-month EPS for Gujarat Fluoroch. FI holding is highest in SRF. PEG is best for Jyoti resin. Public holding is lowest for solar industry. Solar industry is also a good company. Return on asset is 25.63 for Jyoti. Petrosky value is 9. That is 9 is the highest value. So Tata Chemical belongs to that. Apart from that, if next you can see is Jyoti and Gujarat Fluoroch. These two companies got a 8 score. 8 score is also good. It is basically you can for long term you can consider this stock. Profit growth and sales growth, both Jyoti is on the top. Okay, so this is my today's stock. Next pick will be Fine Organic Industry Limited. It is also very good, and I'll give you more insight of Fine Organic. I devote a significant amount of time for researching this stock, providing valuable insight to you. In return, I kindly request you to support by liking, share and subscribing to my channel. Your encouragement motivates me to continue in this journey. Thank you. Have a good day.